Yeah, now we are good to go. Hello, everyone. I hope you're all doing good today, and welcome back to the live stream. Yeah, now we are good to go. Awesome. I hope everyone has arrived. We just wait a few seconds for everyone to come in. Yeah. Yeah. Anyway, welcome back, guys, to the IQ Option Education channel, and welcome back to the live stream today. And today we're going to be talking about something very practical. And as you can see, the title, the 5-minute trade analysis. And as we said, finding high probability setups. So the goal today is actually very simple, okay? Because I don't want you guys to be looking at the chart and like immediately asking or thinking, should I buy or should I sell? But instead, I want you guys to learn how to look at the chart, understand what price is actually doing, and then remove the sort of the bad setups, and only then you can actually think about an entry. Yeah, and so I'm going to keep everything actually very simple so that everyone can actually understand what we're actually talking about today. And we're not going to sort of fill the chart with 10 different indicators. We're not going to do that. And our goal is actually to sort of make our chart look very clean and very clear. And so we're going to use a small number of things that can work together. This includes like trend, support or resistance level, candlestick confirmation, and then candlestick confirmation, and then moving average and risk management, of course. And so we're going to take what we learn after the sort of the little bit of theory session. Then we would open the chart and apply all the things that we learn, apply all the lessons that we learn, and then test what we learn here live and like execute some a trade or two to sort of test our knowledge live on camera. And so that's what we're going to be actually doing. And so this is the title of today's webinar or today's live stream session. And let me open the next yeah, okay. Okay, yeah, so here's what we're going to be doing today, of course tonight. And so what we are trying to do, or just before we start, let me be very clear. Let me explain what I mean by the 5-minute trade analysis. Okay, it doesn't mean that every trade should actually take 5 minutes, although that would be our expiration time here in the trade or in this live stream. But what that means is that we are giving ourselves, or we're going to be giving ourselves a short and sort of a structured process for reading the chart before we make any trading decision, or before making any trading decision. So instead of opening the chart and randomly searching for an entry, we will ask a few simple questions. First, this is why we have the structures or the levels, as you can see them here in your screen, right? First of all, what is the market actually doing? And that is the structure. So is the market going up? Is the market going down? or is the market going or moving sideways? And then second, that is the level, right? Where is price currently located? Where is price located at currently? Is price near an important support or a resistance area, or where the spot really is, right? And then the third thing we're going to be talking about, that's actually the price action. That is, what is price telling us at that particular area, okay? And then after that, we will actually talk about the risk management, of course, so that we do not end up blowing up our account. And then what is price telling us at that what do you call it, at that area, right? For the first action, right? Define your risk position size and in invalidation level. That's our number 4, which is risk. And the last one, which is number 5, decision, right? Decision. So do we actually have enough confirmation to consider entering a trade or opening up a trade at that moment? Do we have all the confirmation that we needed? If the answer is no, we don't force any trade, and so we don't enter a trade at all, right? Because sometimes the best decision a trader can make is simply to wait. And yeah, and also sometimes, as they said, the best trade is no trade at all, because it is better to not enter a trade than to actually enter a trade that would end up causing you loss, or that would end up as a losing trade. And so that's actually very important. And so we're gonna move forward with trend. So first of all, what is a trend? Because like we have to start with what is a trend. Even though we hold so many live streams, and like in the last webinar we have, or the last webinar before that, we actually talk about in the naked chart 1.0 or the 2.0, we actually talk about trend and what is trend and what is a trend. And so let's actually start with one of the most important basic sort of concept, which is the trend itself, not the uptrend. So before we enter the uptrend, before we get to the uptrend, anyway, a trend is the general direction in which a price or the price of an asset is actually moving over a time, or over a period of time. And so where is price heading at that period? And there are actually there are 3 different or market conditions that defined a trend. There's an uptrend, which is what you are looking right now in your screen. There's a downtrend, and then there is sideways. And so to make it very clear, a short definition of what is uptrend, downtrend, and sideways. If the market is generally moving upward, like you can see right now in your screen, then we call that an uptrend, or the market is in an uptrend. And if the market is generally moving downward, we call it a downtrend. Well, I hope you guys can actually, wow. Please, if you can hear me clearly, let me know. So I can see someone is saying that I'm frozen, of course. But if you guys can hear me clearly, please let me know so that we can actually continue the session. We hold so many live streams, and like in the last webinar we have, or okay, so we'll just continue. Can anyone say anything? Well, I want to you guys at the comment section, can you actually say anything? Wow. Anyway, so anyway, as we are talking about the uptrend. Someone said I'm actually frozen, so I don't understand if you guys, I don't know if you guys can still listen to me, so that we can continue. It seems like everything is back again. Okay, thank you. So that's actually an uptrend, and if the market is generally moving downward, then we call it a downtrend. And if the price or if the market is moving sideways without a clear direction, then we call it a range or a sideways market. And the reason why we call this, or the reason why trend actually matters, or the reason why we're talking about trend once again in this webinar, is because if the market is clearly moving upward, then we should be more interested in opportunities that actually agree with that direction. And so if we are entering a buy signal or a buy trade or a buy order, we want to make sure that the trend support our goal. And so if our goal is a buy trade, we want to make sure that the trend support our buying order. And if our goal is a selling order, we want to make sure that the trend support our sort of our order or our goal, because it is, as they said, the trend is your friend. Yeah, nice to hear that. Thank you. So awesome. So it is as they said, I'm sorry, that the trend is your friend, right? And so talking about uptrend, an uptrend is a market condition where price generally moves from higher highs and higher lows. And so as you can see right now in your screen, you can see that the price started around the first higher low, and then it moves up, or it continued to move in an upward direction, and that is when we have a higher high. And then the market moves down a little bit, we have a higher low around here, and then the market continued to move up in an upward direction. Awesome, nice to hear that. And so when you look at the chart, or when you look at your screen right now, you can see that the market is going in an upward direction. Well, I think the voice matters the most, so I'll just continue explaining, since you guys can actually see your screen. I'll just minimize my my screen a little bit so that you guys can actually focus more on what matters. That's too small. Maybe something like this, right? Yeah. And so in just a simple words, when price pushes upward and then pull back a little bit, or it just pull back, but then the pullback does not actually destroy the previous structure, then price pushes even higher, or price pushes higher again. That is when you have a higher high and a higher low, and that is what an uptrend means. And so when you look at your screen right now, and you look at the image that we have currently in your screen, this is what a higher high and a higher low means. Awesome. So higher high, higher low, higher high, higher low. And so that is actually the structure, and that structure is actually telling us that buyers are currently controlling the market, or buyers are actually in control of the market, or the buyers have a much more stronger control of the market than the sellers. And so when we have a trend that is actually going up, and our goal is to enter a buy order or a buy signal, then we knew that for sure the market is going to continue to go up, and that would give us a higher conviction that the market is actually going up, and then we can execute our trend based on what we see. And then the next line is actually the downtrend. And so before I continue, before I start explaining the downtrend, let me open the promo code. And so guys, here's the promo code. Let me push it around here so that it doesn't. Okay, so here's the promo code. I hope everyone can see the promo code clearly. So this is 120% deposit bonus from promo code. It is not a risk-free promo code. And so if you use the code, you can actually deposit any amount and get 120% deposit bonus on your deposit on IQ option, of course. And so but guys, I want you to focus more on the live stream or on the webinar, so that you can understand what we are talking about, and then later on you can actually go ahead and deposit money and use the promo code. But it is very important to actually focus on what we are doing right now. And so moving forward with the downtrend, so now let's look at the opposite of an uptrend. A downtrend is a market condition where price generally moves or generally forms lower highs and lower lows. And so the market is actually the reversal of an uptrend. The market is actually going down. Yeah, nice to hear that. So price moves down, makes a temporary pullback, and then continues to move in a downward direction or continues to move lower. So we have lower high, lower low, lower high, and another lower low. So when you look at the screen right now, you can see that the market is actually going in a downward direction. We have a lower high, lower low, lower high, lower low. So the market is just going in a downward direction, and that is a downtrend, or that is what a downtrend moves in. And this tells us that sellers are currently controlling the market more strongly, or it means that, or it is actually telling us that the sellers have far more control of the market, and then the market is more likely to continue in a downward direction. So when we are looking for a sell order or a selling option, then we can execute a selling option around this section. And then we're gonna move forward to the most important thing, because we seems to be taking a lot of time in explaining downtrend, but the important thing is that trend itself is very important, and I want you guys to understand where we are heading even before we move forward. We will open the chart now so that we can look at downtrend, uptrend, and then sideways, and then after that we can actually come back to continue with support or resistance level. And then after that, we will put what we learn into action and then execute our trades. So now I'm going to go ahead and open the chart so that everyone can actually understand what it means, right? So here we are. Let's minimize this. Okay. As you can see around here, right, we have a market that is continuing to actually go up around this section. Let's have a trend line around here, right? Okay, so this is actually a very good sign, even though like we have the market actually going up, but this is not a good example. We'll just look for a better example. Yeah, so when we actually look at this chart, we can actually see that this direction around this section from here to here, right? Let me use some graphic tools. So when the market is actually going from here to here, right, the market is actually going up, coming down a little bit, and then going up again, coming down a little bit, and then going up again, all the way here. This is not much better example. So let's add another currency pair, because this market seems to be printing very tiny candles, and like the volatility here is actually so GBP USD. So let's look at another chart so that we can have a quick example of the market direction. Okay, we're still, wow. Anyway, so when we look at the direction right now from here, let's look at here. We can see that the market is going in a downtrend, right? Let's have this tool. So around here, guys, you can see that the market is actually coming down from this section, right? From here, the market is continuing to come down. The market is going up, down again. We have a lower low around here, and then it moves up around this section, and then the market continues to come down. And then, so when you look at the direction that the market is going, the market is going in a downward direction. And from there, we'll later talk about these things in the live stream. But then when you look at from here to here, the market is not making any realistic move. So this is a sideways or a range direction. So the market is not actually going up, and the market is not going down. And so this is just a simple example of what we are just talking about right now. But the most important thing is that we knew where the direction or which direction the market is actually going before we execute any trade. And so it is very important for you guys to understand which direction the market is going. So that is your trend. So let's continue. Yeah, nice to have you here, David. Just listen to the live stream and focus on what we are doing. You will learn a lot before we finish the live stream or before we finish the webinar tonight. You will learn a ton of valuable lessons and things that are going to help you in your trading journey. And so just sit down and focus on what we are actually doing and what we are teaching. Tonight you will learn a lot of stuff. Yeah. And there's the promo code around here. So after we finish the live stream, you can go ahead and deposit money into your IQ Option trading account and use the code trade 120AF. That would give you 120% deposit bonus, no matter how much money you deposit. So let's continue with the webinar. So coming back to our, we are now talking about a downtrend, right? Yeah. So we have now shows you what a downtrend looks like and what an uptrend looks like. And so if you're here with us, you understand what an uptrend means. An uptrend is a situation where price or the market is actually going in an upward direction, and a downtrend is a situation where the market or the price is actually going in a downward direction. And that gives you, when it is an uptrend, you will get a higher highs and higher lows. And if it is a downtrend, as you can see now in your screen, you will have a lower highs and lower lows. So that is what the trend means. So the next thing we're going to be talking about is support level. So we talked about support level in our last webinar, right? Yeah, there's Gabriel here in the building. He's actually asking when to buy. So Gabriel, just focus on what we are doing. We will talk about when to buy and when to sell. We will not look at one single indicator or one single technique or one single market structure to decide whether to buy or whether to sell. We will look at many different things that would actually give us a confirmation that the market is actually going in that direction, because there is a fake out and there's a breakout. So sometimes you can see that the market is going in a downward direction, but when you decide to enter the trade, there might be a possibility of a reversal, and then when the market reverses, you will end up losing your money. And so I think it's very important for you just to focus on what we are doing right now. Focus on the live stream. You will learn and you will know when exactly to sell. I will explain that later in the live stream. So just focus on what we are doing. You will learn a ton of valuable lessons tonight, of course. So now moving with the support level, right? This is a very important concept in today's analysis and today's live stream or today's webinar in general. Support is a price level or is an area where buying pressure has previously been strong enough to stop or slow a decline price. And then just think about it, or just think about the area where buyers has shown interest before. For example, let's say, but just looking at your screen right now, when the market is going down and then the buyers come in and then push the price up, and then the price, instead of going down, then the market or the price tend to go up or in an upward direction. and it happened not just one times, two times, or three times. Every time price reaches that level, it push back and go in an upward direction. That is a support level. And what that means is that every time it means that the buyers have identified, or the buyers has recognized that level, and are taking advantage of that level. Anytime price hit that level, the buyers come in strongly, and then they push the market up, and then the market reverse and start going in an upward direction. And so support, we actually call it the flow. In another word, just think about the level where it is a level where buyers come in and depend or take control of the market. So support level is a level where buyers come into the market and take full control of the market. And then moving forward with resistance level. So you can look at your screen right now, and you can see that here are the support levels, and you can see that every time Gabriel, just focus on what we are doing, but I will answer your question later in the live stream. We will come to the section where I will let you know this is exactly where to buy, and this is exactly where to sell. But now you just gather all these different informations and then put them together, and then you will know, you yourself will know when to sell and when to buy. But just to give you an answer, when a support level is a point where you want to place a buy order. So support level is a place where you want to buy. But just because a support level appears, don't quickly jump and buy. You have to wait for some confirmation, which we're going to talk about later in the live stream. But just to answer your question, support level is the position, or is the level where to buy. And then moving forward with the resistance level, I hope you guys understand. And we talk about support level a lot in our previous webinars. And so you can go back and watch the deep depths of support level and resistance level. And there are a lot of videos in this channel, and there are a lot of webinars and other live streams that actually talk about support and resistance level. And so if you want to learn more on support and the resistance level, you can watch other videos in this channel. Even in the IQ option platform, you can watch videos on support and resistance level, and also you can watch other webinars. The previous webinars we talk a lot about support and resistance level. And so let's just move forward with the resistance level now, since we talk about what support is. And so just to answer your question, Gabriel, support level is the place, or is the level where to buy, because we are expecting the market to move in an upward direction. It is a level where buyers come in and take control of the market and push the price higher. So yeah, awesome. So here's the resistance level as well. And so who's that squash? So let's, guys, we have to stay focused on what we are doing right now before we enter the chart and start taking trades. So we're going to take some trades so that everyone can understand what we're talking about. But I want to make sure that everyone knew what those things are. I want to make sure that everyone that joined this live stream tonight can look at his chart, see what is happening, decide what's going to happen in the next 5 minutes, and then open your trade for 5 minutes and win your trade. So that's my goal tonight. And I want to make sure that any one of you guys that join the live stream can actually do that themselves. So as you can see the resistance level in your screen, the resistance level is the ceiling. Just think about the resistance level as the ceiling. Whenever price hit the ceiling, it would move down, it would fall back, it would fall down. And as you can see, there are levels, there are 3 levels here in your screen. You can see them. Anytime or every time the price hit this first level, the market would just push back. And then the next level, you can see when the price hit that level, it also come down again. And then it hit that level again here at the 3rd level, and then the market pushes back again. And so let's say we have a 1 minute candles, and if every candle here is a 1 minute candle, you can see that 1 2 3 4 5 6, and you can see that when you open a sell order here at the first level, when you sell around the first level and then the market reverse and continue to go down, you sell for 5 minutes, it means that you will win the trade for the next 5 minutes. And so that is what the resistance level is. The resistance level, just as the support level, is the position where the buyers come in and take control of the market. Resistance level, resistance level is the position, or is the level where sellers come in and take control of the market. The price is actually going up, and then sellers come in, push the price down and then push back against the bias, and then push the price down, and then the price continue to go in a downward direction, and then somehow the price reverses and start going up again. And as soon as the price hit that level, sellers comes in again and take control of the market and push the price lower. And so sellers have identified that level, that particular level, and make sure that they put their order around that section. And so anytime the price hit that level, the sellers would come back and push the price lower. So that is a resistance level. It is the ceiling where price cannot break through. But whenever price somehow manages to break away from that level, that is when we have a breakout. And so we will talk about that again, but this is the support and resistance level. The support is the flow where the buyers come in and take control of the market, and the resistance level is the ceiling where price tend to hit and sellers come in, push the price back, and then take control of the market, and then price or the market start going in a downward direction, or reverse to start going in a downward direction. So that's what resistance level is actually. So let's talk about why support and resistance level actually exist, because this is a very important question that we have to answer. Because sometimes you will ask yourself, why does price react at these levels in the first place, right? So the simple answer is that buying and selling pressure actually happen between buyers and sellers. So think of it as a rope game where you have 5 people holding a rope from the edge, and then another 5 people holding the edge of the rope from the other direction. So from left to right, you have 5 different people holding, and those people are fighting to see who can overpower or who can overcome their opponent to push them, right? So it is actually a fight between the buyers and the sellers, and everyone is trying to take control of the market. Everyone is trying to win against his opponent. And when we have enough buying pressure, or when there is enough buying interest, or when enough buying pressure appears around an area, it can slow down, or it can revise, or it can make the price to decline at that area. And so when the price first decline around that area, the buyers recognize that level, and then as soon as price hit that level again, the buyers come in again and then push it back, and vice versa. The same thing with the resistance level. The sellers identify that place when there's enough selling pressure. The sellers tend to recognize that level, and as soon as price come back to that level again, they push it back, and the market will just go in a downward direction. So that is what support and resistance level actually is, and that's why they happens, right? So we'll move forward with one of the most important things in this live stream, but not just the live stream, in this strategy, in the 5-minute trading. Because now we talk about the trend, uptrend and a downtrend, and then we talk about support and resistance level. And so all those things, all those 2 factors are enough to tell you that the market is going up or the market is going down. But then this, what we'll talk about right now, it is what will help you decide when exactly to buy. So Gabriel, this will answer your question directly, right? Let me open the chart actually. Not the trend lines, right? Of course not the trend lines. We talk about trend lines, but we want to talk about candlesticks right now. So I have the candlesticks. Awesome. So yeah, so we'll talk about candlestick in a moment. Here we are. Bullish candlestick patterns. So here we are, guys. But maybe we should look at the chart right now and look for the levels, and then we can move forward with the candlesticks, of course, right? So we come here to look at the levels, the support and resistance levels, and we are here in a GBP USD. But just before we move forward, let's use this line, this trend line, to determine. So when you guys look clearly around in this chart, let's remove this line and find a different line. So I guess you guys wanted us to use the support lines, but I'll just use this one so that I want to make sure that you can do everything yourself. So looking at this chart right now, you can see that from here, from this section around here, whenever price hit first of all the price hit this section, and then the market start going in an upward direction, and then around here, right, this is the level. So the market goes up, hit this level, and then push down, and then the market continues to go in a downward direction until it come back to this level. So you can see from this level to this level, it is the same thing. They are at the same level. And what that means is that this is our support level here. This is the first level. The market hit this place. It started from here, but then the market hit this place and then move up, come down, hit this level again, and then moves up again, come back to this level, pushes up again, come back again to this level, and then pushes up again. And so this is here is our support level. It means that the sellers around here, the buyers around here identified this place, and every time the price hit this section, buyers will come in and defend this section. And so the price has failed to break away from either one of these levels, the support level and the resistance level. And so this is a practical explanation or example of the support and resistance level. So the market, you can see around here, the market is actually going up, push around here, come back to this section, pushes up again, come down. So the market has failed to break away from this level or this level. Maybe it will break away from the resistance level around here, but this is the ceiling right here. And let's maybe wait for like 20 seconds and see like what's gonna happen if the market is actually going if the price hit this level. It might actually come back or decide to break away from that that level. But let's continue since we are actually running out of time. So let's continue. But this is actually what support and resistance level is, and this is a tight support and resistance level. But when you sort of pushes back or sort of minimize the chart, you can actually zoom out the chart. Of course, you can actually see much more clear. But this is just for day trading, guys, and for binary options. More importantly, because you are trading for 1 minute, 2 minutes. So this is very important. You can see that we have a 1 minute candlestick. So this is 1 minute, 2 minute, 3 minute, 4 minute, 5 minutes. So if you enter a buy trade around this section, you actually won the trade before the market hit this level and reverses back to this level. So let's get back to the next thing, which is the candlesticks, of course. So these are bullish candlestick patterns, right? And we talk about these candlesticks in our last webinar, right? And the reason why it is very important to look at this candlestick, anyways, it seems like we have some new guys around here. Yeah, awesome. So we have some new guys who didn't actually know what this means. Sorry, guys. I'm gonna take some water. Sorry, guys. So since now we have the location, right? We know the trend, and we now knew about support levels and resistance level, or support areas and resistance areas. But we still need to know what price is actually doing right now, right? We need to know where the price, even if the price is going down, because sometimes it doesn't mean the price will actually reverse. It might mean that yeah, but I hope you guys are actually understanding what we are talking about, right? If you can hear me clearly, that's okay. We will fix this thing. But the most important thing is that you guys are understanding what I'm saying, since we have the screen around here, and my voice matters a lot. So let's move forward. Thank you. So each candle shows you four main informations, four different informations, or the main prices, right? You can see, if you look at the candlestick around here, each candlestick shows you open, high, low, and close. So that's what every candle shows you. And what that means is that when the price open, then that is the start of the candle, and when the price close, that is when the price closes at that period of time, and then open another candlestick. We'll get back to the chart and explain that more, but I want you guys to look at this chart right now, the screen right now. Of course, you can see that we have a hammer, and a hammer is a candlestick pattern that actually tells you or shows you that the market is going down. So whenever you see a hammer on a support level, when a hammer appears at the start of a support level, then you have a high conviction that now you can open a trade. So this is exactly when you can open the trade. This is exactly when you can enter the trade. So when you have a hammer, it is a bullish candlestick pattern, and it is telling you that the market will now start going up, or the market will start going in an upward direction. And so if your support level, if the market hit a support level and you saw a hammer, that means the market is now going up, and so it is the best time for you to open a trade, or it is the best time for you to buy. And then the next thing is the bullish engulfing. If you can see it from here, it is first a red candle, and then after the red small candle we have a very large green candle, and the large green candle comes in and overshadowed the red candle. And what that means is that buyers are now coming in with full force, and they are ready to take control of the market. And so when you have a bullish engulfing happening around your support level, it means that now the market will start going up, and it is the best time for you to open a buying trade. And so we have a morning star around here. It is the same thing. It is still telling you that the market is going up. It is exactly as you can see it, one large red candle, and then a small red candle, and then we have another large red candle. So that is a morning star. And then there's inverted hammer, and then there is a piercing pattern. So all those things are actually telling you the market is going up, or the market will start going in an upward direction. And so when you see any of these things around your support level, it is the best time for you to open a buy trade or a buy order, and you have a much more chances of winning that trade, because the market is actually going up. You have the trend supporting your entry, you have the support level confirming that the market is going to reverse, and then you have a candlestick pattern telling you that the market is actually going up, and so it is time for you to open your trade. We will quickly go into the chart, but I will show another candlestick pattern before we get into the chart. And so the next candlestick pattern is that we have the bearish candlestick patterns. And so just like support and resistance level, these are the same thing. They are the opposite of the bullish candles. And shooting star, it is like the hammer, but it is sort of like the inverted hammer, but it is not inverted hammer. It is a hammer in that is turned upside down, and the color is red. So green color represent buyers, red color represent sellers, green color represent bullish market, and red color represent bearish market. So it's very important for you guys, for the new folks, to understand what that means. So a shooting star, when you saw a shooting star, it means that the market would reverse from an upward direction to a downward direction. And so if at your resistance level you saw a shooting star, that means that the market will start going in a downward direction, and so that is the best time for you to open your trade and to execute your trade, or to open your selling order. And so bearish engulfing is the opposite of bullish engulfing. And so just like the bullish engulfing, bearish engulfing is a start with a green small candle, and then a large red candle comes in and sort of overshadowed the last green candle. So that is a bearish engulfing. And then evening star is the opposite of the morning star, right? So it is the same thing, like the it is just the opposite. You have large green candle, small green candle, and then large red candle. So that's evening star. And then there is hanging man and then there is dark cloud cover. So Sorry guys. Just as you can see them in your screen, these are the bearish candlestick patterns, and whenever you saw them in your resistance level, it is the best time for you to sell, or it is the best time for you to open a selling position or a selling order. Yeah, awesome. So that's what I'm talking about. And also, if you want to learn more about bearish candlestick patterns, or the candlestick patterns in general, you can look at our previous webinars. We talk a lot about bearish candles and bullish candles, and we talk a lot about the webinar is called Naked Chart, and so we have 1.1 and 2.0, and so you can look at those live streams, and you can understand more on candlestick patterns. And so now that we have the candlestick patterns, we'll talk about something very important which will help you in executing the trade, and then we will actually enter the chart and then find entry and then execute some trade. And this is the last thing we're going to talk about, right? We have a picture around here. So this is called a moving average, and a moving average is a technical indicator that calculates the average price over a specific number of periods or days or time, whatever. So for example, a 20 period moving average calculates the average closing price over the most recent 20 periods. You can think of those periods as your last 20 candles. So that is your period, right? And the moving average helps sort of understand which direction the price actually going, and tells you, or make it easier for you to understand or to make your decision based on the market direction. So the moving average just helps smooth price data, and actually makes the general direction of the markets easier to see. Yeah. So I'll just open the chart, and then I will show you an example of the moving average. But the moving average I want you to focus on, which is what we will be using in this the whole 5-minute process. We call it the moving average crossover. A crossover happens when one moving average crosses another moving average. So that is why we call it a moving average crossover. So for example, we can use a shorter period moving average and a longer period moving average. For example, say we use 50 period moving average and 200 period moving average. So when the shorter period crosses above or below the 200 or the longer moving average, that is when we have a crossover. And so when a crossover happens, it tells you that the market is actually reversing in that direction. If it crosses above that level, that candle, it means that the market will start going in downward direction. And if it crosses below that candle, it means that the market will start going in an upward direction. And so now we have 3 different things that we can use to actually confirm where the market is going, or which direction the market is going. So now we will open the chart, look for those examples, and try to execute a trade or two before we leave. So when you open your chart here on IQ option, you can the first thing you're gonna see, if you are new here, we see I can see that there are new guys around here. So if you open your chart for the first time, this is exactly what you're gonna see in your IQ option account. So you first come here to chart type, click chart type, and then change it from trend lines to candlestick. So now we have a candlestick. So this will help you in understanding what the market is actually doing, and this will help you make analysis. But here's what happened. We have a 5-second candlestick, and what that means is that every 5 seconds we will have, for every 5 seconds we will have a brand new candle. So we want to change that to 5 minutes, 1 minute, because we want to make sure that we are making a 5-minute entry. So it is best that we use a 30 seconds candlestick or a 1 minute candlestick. And so in this case, we will be using a 1 minute candlestick. And so now we have a 1 minute candlestick. What this means is that every 1 minute we will have a brand new candle, but it doesn't mean that every 1 minute our trade will close. That depends on our expiration time around this section. So when you are looking for moving average, you just come to this section, indicator section, and click indicators, and then you can search. You can see that here's a moving average. You can click it, So you can choose the period. You have a 14 period around here. You can change period to 50. Let's say this is our green moving average. We can actually use exponential moving average. It would have been better, right? Because we are trading binary options, and exponential moving average are the quicker moving averages. So now we have a 200 moving average. Let's change the color to like green, yellow I mean, so that we can actually see it clearly, right? You can come here if you want to edit your indicator. Come to this section, change the color to yellow, and you can thicker the lines. You can make the lines thicker, a little bit thicker, so that you can actually see it clearly. So now we have our 50 moving average, right? And the next moving average we're going to be adding is the 200 moving average. Level 200, right? And we will leave the color as red and thicken the line, and we will change it. We can leave it to SMA, right? Apply, but still we can actually change it to exponential. I mean 200 exponential, of course, because we're actually trading binary options, so it is better we use the exponential moving average, right? So the 50 moving average is actually telling us what is happening, but this is the faster moving average. And let me zoom out so that you can actually understand better what that means. Now, when the price is above the moving average, it means that the market is going in an upward direction. And this will compound us because this is our resistance level, and the market break away from here. So we have a breakout around this section, and so the market break away from this resistance level, as you can see, and now the market is in a bullish trend. And around this section we sort of have a what do we call it, sort of a bullish engulfing around this section we have. And then now the market is going in an upward direction, and so this is actually telling us that we have a breakout around here, and the possibility of this market continuing to go in an upward direction is much more stronger than the market actually reversing. And we can actually execute a trade around this section for like 5 minutes and see what is going to happen. But then we will open more chart. Although our case is like checking support or resistance level, that is our strategy, but we have a breakout around here because this is our level. The market break away from here, and around here the market moves down a little bit, and then we have a the market continuing to go in an upward direction around here. And you can see now the market is actually going up. We can open our entry around this level, and the market will actually continue to go in an upward direction, and the market will reverse maybe in the next 3 minutes or in the next 5 minutes, but the market would actually continue to go in an upward direction. Yeah, so as you can see, we can have something around here, right? Let's zoom out and see. So this market is actually going up, but let's see what's gonna happen. Let's open some other chart. Currency pairs, I'm sorry. We have, what are you saying? Wow. Sorry guys, nobody talks about you're not looking at the chart. So this is actually what I'm explaining a few seconds ago. So if you are here with us from the beginning of this live stream, you know that we talk about this section. This is the support and resistance level, and this is the resistance level when we talk about it. And now you can see that the market has actually break away from this level, and the market is actually going up, and now the market is actually going in an upward direction, right? So I will try to remove all these things so that you guys can actually, you are not around when we actually, well, we have an alarm making telling us that it is 9 p.m. already, but we have a few minutes to actually. So I'm sorry guys, I just to quickly explain this, what we means. When you open your chart for the first time, this is exactly what you're gonna see in your chart, right? So the first thing you're gonna want to do is you're gonna change the chart type to candlestick. So you come here around this section, change from trend lines to candlestick. So you click candles. So you can see that now we change from the trend lines to candlestick. So the next thing you're gonna do is change the candlestick period to 1 minute. So this is the candlestick time frame. It is not your expiration time, okay? So we want to change it to 1 minute because our entry time is 5 minutes, right? So we change it from 10 seconds to 1 minute, right? And so we want to add the moving average. So we talk about the moving average. Now we want to add it. So if you come in, you can see here is moving average. You click it, moving average. You can change the period. This is the quick or the fast moving average, 50 moving average. We want to use exponential moving average because it is faster and we are trading binary options. So we are using EMA. It is called exponential moving average, and we want to change the color to yellow. So this is the period 50, and then we want to tick in the line so that we can see the moving average clearly. Apply. So now we have a fast moving average, and so sorry guys. So this is our first moving average. It is the 50 moving average. It is much more faster, and then we will add another moving average because we are using a crossover moving average. So the next moving average is 200. So the period is 200, and we're going to change it to exponential moving average, EMA, and then we will leave the color as red, and then we will change the lines or tick in the lines. So tick our lines, and then we will click apply. So if you look at your screen now, you can see that we have two different moving averages. We have the yellow, the 50 moving average, and the 200 moving average. The yellow 50 moving average, it is the faster moving average. So it moves faster. It is for day trading or for scalping trading. And the red moving average or the longer moving average, it is for longer period trading or swing trading. So if you want to look at a long period of time, then you will use the 200 moving average. But the reason why we are combining these two trades, these two moving averages, is because we want to use crossover moving average. And the crossover, what the crossover means is that, just as we explained a few minutes ago, every time the 50 moving average cross over the 200 moving average in an upward direction, that it means that the market will start going in an upward direction. Just to get an example, let's go back. Here we have a crossover. You can see that the yellow moving average crosses below the red moving average, and now the market start going in a downward direction. And so this is the example of the crossover moving average. Whenever it crosses, if the yellow line crosses below the red moving average or the 200 and start going in a downward direction, what that means is that the market will start going in a downward direction. And so from where the crossover happened, you can see all the way here, the market is still below that level. It's still going in a downward direction. And if we move back, we will have another crossover. Yeah, so you can see around here, you can see that after the yellow moving average crossed above the red moving average, the market began going in an upward direction, and you can see the market continue to go in an upward direction. And the second thing you want to understand is that when the market or when the chart is above the yellow moving average, it means we have a bullish trend or an upward trend. Whenever the price is above the moving average, it means that the market